Our guest says inflation remains the market's biggest worry, and he does think inflation will keep climbing. He recommends investment portfolios keep higher for longer in mind. We're joined now by Michael Landsberg, Chief Investment Officer at Landsberg, Bennett Private Wealth Management. Thanks very much for joining us. So you think that the Fed will be very loath to cut interest rates? Inflation's still a threat?
I think realistically, if they hadn't said they'd cut in 24, we wouldn't be having these discussions. I mean, earnings growth has been really strong. You've got speculative spirits back in the market when you start to see the meme stocks and IPOs back. And inflation's going up. I mean, I'm looking at kind of the data on services. A lot of things are going higher, not going lower. And I think that's gonna be a scenario where we're gonna see a little bit more inflation in the back half of the year. I
thought we'd seen a general slowing in inflation.
Well, I think some headlines you have, but realistically, if I looked at headline inflation last month, the only reason it missed expectations was used cars dropped significantly and caused it to miss versus if it had actually come in as expected. So I look at it and think, boy, we're not buying used cars every month and buying it every 3 years. That's driving them lower. But in reality, we see a huge run up in the price, for example, of cargo ships. Freight is up 125% year over year. That's gonna, the United States doesn't make anything anymore, so that's gonna reflect in that. Services are up a lot. Services, core services up over 5, owner's equivalent rent nearly 6. And I look at that and say, yeah, that's the stuff that consumers are gonna pay for. I think realistically, again, if they hadn't said they were gonna cut rates in 24, I don't think we have the discussion.
They should have just stayed stum and not made a promise to cut rates. And you think there's a case they could even increase borrowing costs? They could even be wise to do that?
I don't think, here's the, again, with them, if they had not said it, I think you could make the case that there's an argument for stronger growth, stock markets at all-time highs, Bitcoin near all-time highs. There was some speculation in the market. This last week and a half or so has kind of taken some of that wind out of the sails. But I don't see really a reason to cut rates to generate more interest in the market. The market seems to be doing quite fine. And I look at it and say earnings were up 8% year over year for S&P 500 companies, up 30% year over year for NASDAQ companies. So why do we need to help it out a little bit? I think you can kind of stay put for a little while and see what happens.
Yeah, that's interesting. Yeah, there really isn't a side. What about this feeling, though, apparently of despair among many middle-class Americans? I guess inflation is painful. Maybe that's why they're not feeling good.
Well, absolutely. And I think you saw that in the Indian election. India's been a great market for us, for a lot of investors. Wealthy people got really wealthy in India, but the rest of the country didn't. So they kind of voted the majority out for Modi. I think you see that in the United States. Inflation has compounded the last few years. So although it's not 9% now, it's still, let's say it's 3 and change, it's compounded every year at some higher numbers. And I think that's really the issue. Isn't what it is today, but it's compounded for the last 3 years, and it's put some hurt on some folks, and they're not really happy about it. And that's why I think you see the level of despair with a lot of consumers. It's a little bit different than it is with Wall Street.
You are in the commodity camp. You think energy, mining, materials have decent prospects right now. I know they've been weak today.
Absolutely. I mean, energy is a little different given the fact that we had OPEC have a little surprise. They're going to start putting out stuff there. But I am a fan of the mining. I think that continues to do well. We like copper. We like uranium. I like commodities as a way to be able to hedge ourselves against inflation. And there are stocks, I think, that do well in an inflationary environment. It just means investors have to have a little bit of money allocated to inflation, because I think most of them are underweight there. And that's been a good sector for us for the last 6 months.
You're not a bond buyer, or at least you're not buying long bonds, to put it mildly.
No, I think right now, you can get a good return in cash, in short term. So why stick your neck out there and try to guess what the Fed's going to do? I think that's an area that I think when we have an area where we know rates are going to go lower, they're going to stay, then that's probably time we might look to extend duration. But we've been hearing extending durations for 6 to a year, and we've been short, and we've done well there. We'll continue until there's a reason to change.
And I'm interested with this one. Nvidia hitting a new record high today. Excuse me. You think it's still cheap? Sorry.
I do. if I look at where the earnings are, and that's really what we, at the end of the day, what we look at as portfolio managers, what are they going to make? If I look at that and say they're going to make $40 or $45 a couple of years out, it's trading at 25, 27 times earnings. With that big growth, the S&P is trading over 20% with 8% growth. So I can certainly make the argument it's one of the few stocks that if it plays out the way it has been, it's going to look really cheap, even at 11 and change. 2 weeks ago, it was $9.50. I said the same thing. I think people haven't really looked at what these earnings are going to be specifically for Nvidia, because they're really at the center of AI. There's a lot of companies that claim to be in AI. Nvidia is AI.
They're the real thing, and that's fascinating. I mean, at some point, people will start overpaying for Nvidia with all this euphoria, but you think that we haven't reached that stage right now?
Well, I think it really depends on your time frame. If you're going to own it for 3 months, you might be overpaying today. But if you're an investor looking at a couple of years for this AI cycle to play out, and you're saying, hey, I'm going to own it for 2 or 3 years, and they may make $40 to $50 a couple of years from now, you're not even paying 25 times for a company that's going to make $50 a share. It's probably cheap there. But yeah, in 3 months, it could be lower. I think you have to always look at price, and it's important. But again, your time frame is most important for an individual investor. We've owned Nvidia since May of 19. I don't see a reason why I'm not going to own it till May of 29.